I don't want to be dead. I don't want to be in jail. I want 100 fucking million. It's easy to pull the trigger, but it ain't easy to move your mom out the hood. That's a real man job. They ain't for suckers right there.
Yo, what's up, snipers? Again, this is the support and resistance. I'm gonna show you how I get support and resistance. So candles bounce off of candles, candles reject off of candles. So I'm looking for the most candles in one area, and that's where I will put it. Or if I see a candle rejecting and bouncing in the same spot, that's where I would put it. On the weekly, that's what I really do. The candles rejecting and bouncing like here. Candles are rejecting and bouncing off this line. So I'll start off here on the weekly. So we got our 429.40 area. And then resistance, I'm doing the same thing. I'm looking for flat areas, basically where a ball could bounce. Boom. You want to sit it right on the body of the candle, not the tail of the candle. See how the red candle right there, it rejects off of it. And if you scroll over here, the green candle bounces off of it. Support turns to resistance, resistance turns into support. Vice versa. So now that we have that, I'll go to the daily. And on the daily, I need more candles. On the weekly, I only need, on the big, huge candles, the thicker, the bigger the candle is, the harder to break. I noticed that. So the weekly, I only need like one candle. On the daily, I need a few candles. Like here, I see multiple candles bouncing and rejecting off of this area. So I know this is the area right here. You don't be afraid to zoom in. Remember, we're not bearish until we break that 200-day moving average, by the way, 421.10. And we are not bullish until we break the 20-day moving average on the daily at 439. So, looking for the most candles in one spot. And you want to find the flattest area, just like a ball bouncing. Where's the ball going to bounce? If you drop a ball down and it's not flush, it's not a flat area, it's going to bounce to the right or to the left. You want it to bounce straight up and smack the ceiling. So I'm looking for flat areas. And the same thing as the ceiling, I want to look for flat areas. This is when I come back to the weekly. Because you don't want to, if it's too, so the weekly is going to be spaced out a lot. So I come down to the daily to fill in the support and resistance level. Like I know SPYs is $5.32 ATR. So per 14 days, SPYs moving $5.32. And that's the average true range in 14 days. The last 14 days have been moving $5.32 about a day. So I want to look, I don't want my levels to be too spaced apart. For SPY, I try to do $2-3 ranges and just work it level to level. So right here, it's a flat area. See, boom. The red candle rejected off of the red line. I don't really have to talk much. You could just see everything that I'm doing here. I'm looking for the most candles in one area to bounce or reject. The more candles in one area is harder to break. You just want to put it on the body of the candle. You switch from the weekly. You start with the weekly, but you're going to be spaced too much, so you come down to the daily. You might have to come down to the 30-minute as well, or 4 hour, 1 hour, wherever you're using. You could use those lower time frames to really get it. And just lay that candle. You don't lay, you want to just lay it right on the candle, but you don't want to have too much space. Like it's not Tesla. You don't want to have your support and resistance $8 spaced apart. You want it close. You look for the most candles, and you want it the closest to price. Support and resistance shouldn't be $40 away from current price. I put that blue line there because that's another where a bunch of candles was at. So that 429 to 432 area, it's a lot of resistance or support. I'm gonna remove that because I don't want to have too many lines, and I'll just keep that in mind. The most candles, the most touches is what I'm looking for. And I'll just lay it right on top of the candles. Okay, so we got our bottom, 414, 417, 421, and so forth. I'm gonna have to fill in that 421 to 429. So now, see, zoom in. Don't be afraid to zoom in, y'all. You can see this red line. See, it sits perfect on top of the green candle. And then you can see the red wick smack perfectly off of it as well. This is all you do. You don't need no indicators. You are the indicator. I feel like, well, I don't feel like I'm sharper than an actual support resistance indicator. And you are as well. So don't be lazy. Put the grind in yourself. It's not hard at all. See, we doing this together, and it's kind of fast. We run right through it. The more you do it, the more you run right through it. You want to look for in-between support and resistance, that's a level. You want to look for the most candles, that's a level. That's all I'm doing here. I'm looking for ceilings and I'm looking for floors. Like walls that you're not just breaking through. I want to see a bunch of candles get stuck or smacked there. You see right there, those two, the green and red, perfectly. That's a level because it's flush. It's flush right there at about the 40 area. 440, 70. Yeah, so 440, 40. That's the level. That's the level that we want to see before we say we're bullish. We got more candles here. We got this level right here. See, we're 2 spaces apart because I was at 444. 444, I don't want to be that high. I want to make sure that, because it could be there's no support. I mean, it could be there's no resistance, but I want to come daily to make sure. So I'll come down because I got more candles to work with. And then boom, see, this right here is a ceiling. Resistance and was support. So we would have missed this if we didn't come down to the daily. Flick back and forth. And take your time. I try to get it as accurate as possible. 442.85. It looks confusing right now, y'all. So I'm gonna fix the colors. And when you go down to the 15, 30 minute, it's not so confusing. You can see that beautiful cup right there. If we was to bounce here at the 20-day moving average and go up to 440 and bounce, that'll be a cup. But if we break that 200-day moving average at 421.10, we better be careful because we about to flush. Right now we're in the middle. The market is indecisive. Let's see, candles sitting all on there. When I go down to the 30-minute, it'll look way cleaner. Right now, it's just like a whole bunch of squiggly lines. But I'm just showing you how you get it. And support and resistance levels don't change. You don't really have to move them. They'll stay intact. Because it's structure. You can't change structure. That's like a building. You're not going to be able to change it. You see? Now we're on the 30 minutes, so now you can really see that these support and resistance levels is accurate. If we fall through down, it doesn't mean it's not accurate because it is, because you can still see other ones bounce. It just means that we broke through, but we pulled back. It was a fake out. these levels is accurate. Do it yourself. You don't need no indicators. I mean, if you want to use indicators as a tool to help, that's fine. But I'm saying you don't need no support and resistance indicator. That's just being lazy. And it's not going to be as accurate as you. Right here, this was what I was missing. So we're missing this area. We're too spaced apart, I could tell. So you just want to go back, check your work, take your time, make sure you're not missing any levels. You don't want to be too spaced apart, because then if you do like how I am, I take profit at key levels and R too, but mostly key levels. You could fall, it won't reach your target, and it could just reverse, and you wouldn't even expect it.
If you want to help your entries and exits, let me show you what a control algorithm is in the selling channel. I'll have more on that Tuesday or Wednesday. Probably do a live for selling channel and buying channel. Everything moves in the control algorithm structure.
That's all there is to it. It's a pretty simple concept. That's it.